Hello, folks. Good morning. Good morning. Welcome to another Wealth Coffee Chat. Good to see a few of you up and at it early on. Alison, morning to you. G'day. How you doing? How you going? See ya. Kevin, all the way from Florida in the evening. Redridge, Bradley. Morning, mate. Mick. Howdy. Facebook user, good morning. Morning, Tim. I don't know about that. Tim. I don't know about a recession. I think there's certainly some interesting times afoot, that's for sure, mate. Morning, Alex. Morning, David. Howdy, folks. Good to see you here this morning. I hope you're all awesome and well, wherever you are. Do the little warm-ups and the intros. Most of you know that my name is Jason, but if you don't, if you're brand new, hello to you. Jason Witten here, Wealth Coffee Chats. You've stumbled upon, you might be new to our mentoring or coaching program. Welcome. Let us know in the chat. Say hello. Give us a shout out where you are, what you're doing, where you're coming in from. Good to have you here this morning. We've got a few of the crew in as well. Chris is here as well. Good morning, Chris. I hope you're all good. Hey, this morning I thought we would talk about what I call the risk and reward zone. Who's heard of the risk and reward idea in investing? When you go out there, you go, okay, you got to take a risk to get a reward, and that's technically true. You've got to do something maybe outside of your comfort zone. You've got to, you've got to be exposed to some possibility of maybe a loss or something negative to get a positive. And can you balance that out? Can you understand how to minimize that risk and maximize the reward? Yeah, the answer is yes, you can. You can. For sure, 100% you can. Morning, Luke. How are you, mate? Depends on what you invest in, depends on how you invest, all of those sorts of things. But this morning, thought we might talk about a little something that relates to the world of the real estate market, what I call the risk and reward zone. So welcome along, folks. Good to see you here. Let's dive into today's conversation, today's Wealth Coffee Chat. Wealth Coffee Chat. About the idea of the risk and reward zone. Well, let's have a bit of a look at what I'm talking about here, and we'll put it in perspective. The idea that over time, markets travel, and certainly property markets travel, moving forward. And tell me in the chat, folks, is we're going to talk about growth today. We're going to talk about property growth, market growth. Is growth a linear process? Every year it grows the same, or linear? Is growth is property market growth a kind of, you start here and you go down to here, let's say 20 years, and is it a straight line? Is growth a straight line? And the answer is never no. Yep, absolutely, Brad. That you'd be mad to think so. However, what does happen is often growth travels along in a wave like this, is sort of an under and an over and whatever. And you can sort of see it travels along in a band, let's say in here, you got a kind of, an up and a down band, but it does travel in a, over time, a cycle time, let's say a 10, 15 year time frame. It does travel in a band, a trajectory. And often many of us forget the forces that underwrite kind of, especially property growth. What's one force that pushes property growth kind of by default? And there's a lot of people that say, well, this is not a real return if you can't beat this thing. If you can't beat this thing, if you can't beat it, then the growth that you got wasn't real. I don't know. Am I asking the right question? What's something that pushes growth along, by default? And it pushes growth along in all sorts of places. And we've had a bit of an issue with it of recent times. It's been higher than we wanted it to be. And that's why the interest rates have gone up. You know what? Yeah, takes the scenic route. Yeah, definitely, Alison. Takes the scenic route. Yep, often does, totally. Yep. Sort of up, sideways, et cetera, et cetera. And David's on it. Like annual inflation, average annual inflation, right? So inflation pushes things along and sort of has this underlying base of kind of like, all right, well, by and large, last year or the year before it cost X amount to build a property. And now it costs X amount. It costs more this year to do the same thing as last year. So by default, give or take some, scenic arrival of the of that growth mechanism, then growth goes along. But let's talk about the conversation today, where I want to talk about risk and reward zone when it comes to the idea of investing in property. Now, tell me, what's the reward zone, folks? What's the reward zone? Tell me, as property investors, what do we like to get and receive when we're taking action in the market? What do we enjoy? What is the piece of the action that we really like, right? And I'm going to break this up into two sort of sections here, so we can have our conversation, right? This is the growth zone, right? This is, we're getting some growth, right? And we're all excited about growth. That adds some value to our portfolio, percentage, dollars, happy days. All right. Now, can you pick growth? Can you say, all right, well, when does growth happen? What goes on? And often investors, unsophisticated investors, arrive late to the party. Growth is already off and running. Because they don't understand the risk zone. So let's just put this in perspective here. This is the reward zone. We get a reward because we own the property and we get some growth, right? Now, what's the risk zone? Yep, cash and growth. Yep. Okay. So what's the risk zone, folks? The risk zone is here. And often, for my experience, sitting down with property investors, we don't understand the risk zone as we go along. So we've gone through a risk zone just recently, and there is risk zones in real estate and reward zones in real estate, or time frame. There's a time frame of risk and there's a time frame of reward often. And for me, for you, I've always seen. Now, this is not a forever statement, but it's pretty accurate. After some risk in the game of real estate, I have always seen some reward come, which is growth in property values, right? So when do we get involved? The conversation today is about the timing, and what do they say? There's a saying, if you try to pick the bottom of the market, all you end up with is a smelly finger. It's not a very PC joke, but anyway, that's true. You're going to try and pick the bottom of the market. Try and pick the bottom of the market is no good. We need to understand how to get involved, or when to get involved, and what the risk zone really means. And that's kind of the conversation today. So let's have a bit of a chat about what's going on. So let's say, and tell me right now, what do you guys think? Are we still in Are we getting rewarded for property ownership right now with growth, or is it sort of flat or declining at the moment? So I'm trying to ask the right question without giving away the answer here. When did the cycle, the property growth cycle, start? Are we still in a flat or declining market right now, overall in general, or have we started the next growth cycle, folks? And it might the growth cycle might go for 12 months. It might go for whatever it might be. And yes, the statistics are showing David is accurate. We've started the growth cycle. When did it start? How many months ago did it start? Well, we'll have a look at that in a minute. February 23. Luke's on it. Luke, have you got the same charts that I've got? I think you might have. You've been looking at them, which is great, which is awesome. Right, but what's the risk? What was the risk zone? What happened in what we would call the risk zone, folks? What happened that freaked people out a little bit, and by and large, with the statistics and the charts, what happened with the market and what we would call a risk zone? Well, interest rates went up, right? Interest rates went up, and they went up according to the media. The fastest. Let's have a look down here. The fastest cash rise we've had in a long time. Went up 12 rate rises in a row from a record low. All right. So over here, interestingly enough, I was looking at this the other day. Have we been here before? Yes, we have. And if you have a go look at this. Over in 2008, I think it was here. This was kind of the highest points. This was higher than that is today, which is the mortgage interest. This was sort of the average percentage of interest after the gross income after tax and whatever that people are paying or spending on their homes. And in 2008, it was higher, which is interesting. But anyway, this was the risk. Okay, the cost of money went up significantly for investors, property owners, anyone with a mortgage, anyone with a loan, that sort of thing. So there was a risk increase pretty significantly for those investors. And, a lot of people sat out of the market, right? But this part of the marketplace, which is often, thought about, it was high inflation. So you got interest rates, you had inflation, etc. So the unsophisticated investor saw that as high risk. All right. And the conversation today is, when do you get off the fence in this risk zone and get involved in the market so you don't miss this part of the turn of the market, right? And for me, for you, when we're talking about our property strategies, if you have a long-term view, which you should, well, I don't really care if you buy in the middle of, a market changing. It doesn't really matter. Over the long term, none of the minutiae of the exact timing of your portfolio purchase will make much difference, if any, over a 15 to 20-year period. And too many investors labor on about, is it the right time? Well, I can tell you, if you can buy a property, then you should, right? And that's right. That's all right, Alison. Whenever you can. Like the interest rates and the purchase price and the market timing, all of that, to be quite honest, when it comes to medium to long-term wealth conversations, is a distraction. It's not the conversation to be having. Now, certainly, if you've got some uncertainty in your financial world, let's say job uncertainty or borrowing uncertainty or whatever, that's something that's a little bit different. But the idea of when can we buy in this risk zone to receive the maximum reward, well, that's something we need to have a bit of a look at. So have a conversation, or have a look at this conversation here, where the interest rates, let's go and look at each of the cities. We had some changes, some declines in value, right? Some declines in market value the rate of growth over time. This is an RP data chart, right? So if you look at when did that change, when did we had sort of, maybe 6-9 months of, the rate of growth slowing and then going into negative territory. But, Sydney, Melbourne, Brisbane, and Adelaide have all shifted over probably, and I think it was since the beginning of the year, they've all had an increase in value. So let's say right now, a property for 700,000 has gone up, let's say 4%, times that by 4% is $28,000, right? Okay, so we've got growth already happening under our noses, right? So for many property investors, they're still sitting around going, oh, well, interest rates are too high. I can't get involved. And so when do we enter that market and start to get the reward zone is the conversation. Do we wait till it sort of, peaks out and peters out, or do we wait, or do we just, get going in the middle of that risk zone reward? And the answer is get going whenever you can, really, at the end of the day, because these things are things you can't control, right? As a property investor, if you can buy that property, you should, when it comes to understanding your profile, your ability to borrow, getting involved in the marketplace, right? So the misunderstanding is that the risk is a negative, and the point of understanding the risk is it's actually a positive. It can be a benefit for you to buy in those times, because there's less competition, folks, isn't there? There's less competition right now. There's less competition. The borrowing and the marketplace is excluding a lot of people, either specifically because they can't afford to buy the property, or because their emotional, mental capacity can't handle what is a perceived risk, which will change pretty quickly in the coming little bits. There's lots going in the positive right now, which cancel out the risk zone, right? We all know that. We've got, an undersupply significantly. We've got population growth from immigration, coming in, thick and fast when it comes to the number of people entering the country. We've got rents going up. We've got capital growth kicking off again in general across, slowly across the country. The quality of the quality of properties out there is a little bit thin as well, and that's creating more and more competition. Prices are going up. You're seeing clearance rates stay high, 70-80% across the auction cities. So, yes, interest rates are high. However, we all know that the other things that are more important than that perceived risk are going to outweigh that. And we all know that the interest rates will change very soon in the next little bit. Let's say by middle of 24, interest rates go down. So if you're in place, then you're going to be winning before everyone else. Anyway, there you go. A little bit of an idea of what is a risk and what is a reward. If we want the reward, if we want the upside here, undo that. If we want the reward as an investor, then we need to understand when to get involved, and it is often in the risk zone when there's less competition, when you get the best price, when there's less buyers out there, and you get to ride the full reward rather than try and buy halfway up the reward, halfway up the growth cycle, and maybe pay more than you should have. Anyway, there you go. Wealth Coffee Chat done and dusted today. How do you like that drawing? It looks a little bit messy. Hope you understood the understood the idea. Anyway, there you go, folks. That's it. Wealth Coffee Chat done and dusted today. Give us a shout out in the chat if you've got anything you want me to cover one of these days. Always read the comments afterwards as well. And join me tomorrow for another one. We'll do another one tomorrow. There we go. Tomorrow, 8:10. Always happens. Mostly happens anyway. Thanks for joining me this morning, folks. That's it from me. I'm just rabbiting on now. You guys take care. Bye for now.